Check this out. If you own your own home, the next few minutes could completely change your financial life. I promise. Now, let me explain why breaking your mortgage early, yes, breaking it early, paying a penalty, and switching to a loan with a higher interest rate would somehow save you nearly 15 years of payments. Sounds crazy, right? Like trying to lose weight by eating more carbs. But stick with me because what you think you're saving might actually be costing you a fortune. Most Canadian mortgages run on compound interest, which is a fancy way of saying the longer you owe us money, the more money we get paid exponentially. Your payments feel predictable and responsible until you do the math and realize you've paid more interest than the actual house is worth. But hey, the bank sends you a nice letter every year, so that's something. Basically, compound interest is like charging interest on interest on interest. Behind the scenes, your bank is having a great time collecting way more than you think. The product we're talking about is called the Manulife One. It uses simple interest, which, brace yourself, is actually simple. You only pay interest on what you owe, not on last month's interest over and over. It also ties directly into your bank account, meaning your deposits go straight towards reducing your debt, which is wild because most traditional mortgages treat your income as a separate entity, as if you need permission to reach your mortgage. With the Manulife One, your cash flow becomes a weapon, not sitting idly by watching your debt pile up with a traditional mortgage. You're standing on an escalator, you're just standing still, the escalator is slowly moving towards your goal, you make regular payments, progress happens, but it takes 15, 20, sometimes 30 years. You're relying only on the system to move you. In other words, you're the person on the airport escalator who just stands there while everyone else walks past. So you're heading towards your flight, but you still miss the gate. With the Manulife One, it's like you're walking up the escalator. You're still on the escalator, but now you're actively walking up while it moves. Your income deposits directly reduce your debt daily. Every extra dollar, every step you take gets closer, faster. You combine the escalator's movement and your own effort. The result, you reach the top sooner. In some cases, 15 years faster. Imagine that. The same debt, the same income. You're putting your own money and income to work instead of letting it sit in a checking account and possibly paying fees. So let's break this down with an example. Suppose you have a home with a value of $600,000 and a mortgage of $300,000 at 2.99% interest, fixed rate, compounded semi-annually. Your mortgage payment should be $1,660 per month. Your household's net income after tax is about $8,000 a month. You have no credit card debts, you pay them off monthly, and no other debts. Your household expenses are about $2,500 a month. That includes groceries, utilities, insurance, entertainment, everything else. Your total monthly debt payments would include your mortgage plus expenses of about $4,160. That leaves $3,840 in monthly cash flow surplus. So we've got nearly $4,000 per month just floating around. And in the traditional setup, most of that just sits there, not invited to the mortgage part. With the Manulife One, this goes as a prepayment towards your mortgage. The Manulife One has a calculator, and no, it's not the same calculator your bank shows you how much you're saving with compound interest. So here's what I plugged in. As mentioned before, we have a property with a $600,000 value and a mortgage at $300,000. The rate was 2.99%, which gives us a monthly payment of $1,660 per month. But again, we assume no other debts. Now looking at the results, let's see how much we're saving. Here we are. As a result, $54,385 in savings and interest and debt-free life in 5 years and 4 months. That's 15 years earlier than the traditional mortgage because apparently letting your income actually does something every day beats sitting in an account. Here's why this works. With the Manulife One, your pay lands directly in the same account that's tied to your mortgage. That means the second your paycheck hits your account, your debt starts shrinking. Not eventually, not next month, immediately. Compare that to a traditional setup where your money just hangs out in a checking account like it's on vacation. You leave it there because you've got a car payment next week. Maybe the mortgage comes out in 3 weeks. No big deal, right? Except it is. Because during those weeks, that money could have been reducing your mortgage balance and saving you interest. Instead, it's sitting around doing absolutely nothing, like an employee who clocks in but never actually works. Now multiply that by every single paycheck over the next 25 to 30 years. That's decades of unnecessary interest, all because your money was too busy waiting around. That's right. There is the quiet magic of the Manulife One. Your income doesn't just exist, it goes to work the moment it arrives. And there are no fixed monthly mortgage payments because your income is the payment. And since interest is calculated daily, the less you owe on any given day, the less you pay that month. Simple, logical, somehow still not the default option in Canada. Go figure. The calculator also gives you a year-by-year comparison of the traditional mortgage versus the Manulife mortgage. In the traditional mortgages, we see slow, steady descent into 20 years of debt payments versus the Manulife One, you're debt-free in just 5 years and 4 months. Now, yes, clearly in the early years, you might pay slightly more interest, as we can see in the Manulife One versus the traditional mortgage. But you know what else happens in the early years? You destroy your principal. See how much principal we're paying in Manulife One versus the current way? You shrink your debt like it owes you money. So do you want the convenience of paying a steady payment to your bank for the next 25 years, or do you want to beat the bank and pay off your mortgage in 5 years? If this video helped you see your mortgage and debt differently, hit the like button, share it. If you want help setting up a strategy like this, contact us. My info is below. Thank you for watching.